Adobe announced their earnings yesterday after the market closed. The earnings were good, in my opinion. The top line revenue grew by 11%. Company was profitable. Their cash from operations was higher. They bought back shares. So why is the stock crashing in the pre-market? It's down about 10%, which is a lot. It's the theme that I saw a quarter ago, and it's really been dogging the stock. AI could be a threat to Adobe's business. It certainly can, but I don't know that it's going to happen all that quickly. Since Adobe's proving that they continue to grow this large business, I continue to really believe in the company. AI may someday help us create documents, create videos, create images, but at this time, I'm not quite sure that mainstream creators are really using AI all that much. I know I certainly, in my professional life and in my personal life, and even in making videos, I use AI a little bit, but really, principally, original content creation is still the way that people are getting their jobs done, are really responsibly doing their work, and so forth. So let's take a look at Adobe's financial release, and I'll value the company, and I'll let you know what I think the company is worth. I'm a current stockholder of Adobe, and I'll let you know what I plan to do going forward, especially today if the stock is going to be trading down 10%. Looking at the earnings that Adobe announced, the earnings were really good. The performance is really good from Adobe. Growing their top line revenue 11% on an already very large business is quite impressive in my book. They also expanded their profitability on an earnings per share perspective, expanding 17% if you look at GAAP earnings per share. Their cash really expanded nicely as well, 83% higher in the fourth quarter that they just closed. So the financials look really good on their earnings. The fly in the ointment, what caused the stock to really sell off, is Adobe is really acting very conservatively. I looked at how they guided for their current fiscal year that ended at the end of November, and they guided conservatively. They actually beat their revenue by about 2 percentage points. So I think they like to guide low and outperform that number. And I think that's what they did in their earnings announcement. It's probably something they're going to continue to do just culturally. They want to set expectations a little low and probably overachieve. That's certainly what they're doing. If you look at what they guided their revenue to be, they're guiding FY25 to grow between 8 and 10% top line growth. That's still really good growth. I guess the market wanted even higher growth, which is a little bit surprising to me. I think other companies are growing about the same clip and they're doing quite well from a stock price appreciation perspective. But the market's going to do what the market's going to do. And me, let's take a look at Adobe's history and see what I expect going forward. The company has been growing the revenue quite nicely over the years, from 2018 up to 2024. Really positive, green on the screen, with the company just getting bigger and bigger each year. And they continued on that growth pattern for the full fiscal year of 24. That looks great. What also looks great is their cash flow and their margins. When we look at their margin percentage, it's 89% in the most recently closed fiscal year. Gross margins of 89% are exceptional in my book. So that looks awesome. And cash flow also expanded in the quarter. So those things, to me, are really good metrics that show the company's really operating well. 26 analysts cover Adobe, and overall, they have a buy rating on the stock, and they believe it's discounted by about 7%. But that's soon to be about 17% because the market is going to sell off the stock and discount it further. Overall, I think there's a lot of attention on Adobe. It's a high quality business, and it's worth considering for me. When I look at their earnings per share, the earnings per share look really good. When we look at the fact that for the new fiscal year, they're going to be at around $20.96 per share. It's a growth of 12%, and the forward P is 26. It's a growing software company with 89% gross margins, great free cash flow. 26 PE is a very fair price. And beyond the next fiscal year, if we look at fiscal year 26, it's going to be a 22.94 PE, and then it's going to drop to 20.65 in fiscal year 2027. So the earnings per share look really good for Adobe. The market cap for Adobe is $242 billion, and that's before it drops by 10%. If it drops 10% from there, it's going to be around $220 billion in market cap. The revenue is around 21 billion. So not too bad, 10 times revenue for a high quality business that I believe is the leader in their space. The forward PE for the current fiscal year of 25 is about a 27. Not too bad. Analysts believe in the company, and they just announced their earnings yesterday. Looking at the 5-year, the stock is up 80%, but you can see there's been a lot of volatility. Boy, it really sold off in the 22 era, along with a lot of other stocks. It came back, but it hasn't really continued that appreciation. And it's really offered up some pretty good prices. I think the whole AI story is keeping the stock down. So is AI going to disrupt Adobe? I don't think so, but that's my opinion. I think most of the market is unsure or believes that AI will disrupt Adobe, which is why the stock's being sold off. Adobe stock, in my opinion, is discounted by 13%. And I get there by valuing the free cash flows the company is going to produce going forward, growing them in the near term by 9% and then long term by 5%, and then discounting those cash flows by 8%. Overall, I get an intrinsic value of 247 billion. They have more cash on the balance sheet than they do debt, so their balance sheet's excellent. Overall, once we get that price reduction today, it's going to be discounted by 14% if I look at cash flows. If I look at earnings per share and give them a PE multiple of 24 and a growth rate of 9%, I get an 11% discount. So when I blend the two, I get a 13% discount. That's a very good discount on a high quality business. I put Adobe in the most desirable part of my desirability quadrant, which means that the company has very strong moats. It has very strong characteristics that value the company very highly. Let me go over those. First, for the moat, are there companies out there that can match Adobe's excellence in the creative software space? And the answer is no. I think that they have users around the world, predominantly in the US, that really use the Adobe products, in some cases to do their jobs, to run their small businesses, to run their large businesses, to do advertising. I mean, these are things that just continue on through thick and thin, through bad economy or good economy. Adobe will be in demand by customers. So I believe that the moat is quite wide and quite strong. The other things I like about the company is their very high margins. This is a software business. They develop their software, they make the best software in their space that's available, and customers pay a good price for it. They generate good profits and very good free cash flow. Their growth shows that they continue to grow within this space quite well. Maybe in the future, Adobe can acquire a business or two. They've done that successfully in the past, and they can continue to do so to make themselves bigger, stronger, and get better share of customer wallets. So overall, Adobe is a highly desirable business for me. And I will be buying more shares of Adobe today on the dip. I think Adobe is one of those stocks that I can see myself owning for a very long time. So that's my video on Adobe. Please do not take my comments as any financial advice. I do not recommend you buy, hold, or sell Adobe. I'm just expressing my view of Adobe, my opinion, and what I plan to do with my portfolio as an individual investor. I really appreciate you watching, and good luck investing in 2024.